Well, if you're starting a business, I think you have to be all in or not in at all. You've really got to be committed. People come to me, whether they're tradies or whatever kind of industry, they've worked for somebody, and they've said, I want to start my own business, I want to do my own thing. I said, fine. Do you realize what's involved? You got to look them in the eye and say, mate, are you prepared to work 30 hours a day? I know there's only 24 hours in a day, but are you prepared to work 30? And they look at you and go, what do you mean? Well, you really need to bust it to make something of it. So you can make it, but you've got to dedicate your life to it.
Welcome to the Vision Boards. What we're doing here is like meeting with the entrepreneurs, business owners, and the industry leaders to bring them here and get their experience, and then uncover some of the lessons, and so we can help better futures for us, for our businesses, and then for our future. Today's guest is Frank, is from BTC. Welcome, Frank.
Thanks, Eddie. Thanks for
the people who don't know you, all right, so can you just tell about yourself?
Okay, I'm a lifelong accountant, partner in BTC, which is also stands for Business and Taxation Concepts. Been an accountant, like I said, all my life, and don't know anything else. So I guess I should be good at it by now. So yeah, I basically started as an accountant, straight out of uni, and first job became an accountant, and I was good with numbers at school, so that's what threw me into the profession, let's say. And from that, I didn't really want to do accounting from leaving high school or anything like that. It wasn't on my radar to be an accountant. It was, I think at the time I wanted to be an engineer or something like that, because I like physics and things.
Yeah,
bit of a nerd, I guess. But I got accepted into an accounting degree, and I just took it on and started working. I started studying full-time and did it full-time. And then I started as an accountant, and the rest is history, I guess. Yeah.
So looking back to your career, it's like how long? I'm going to ask that question.
Well,
you don't want to uncover your age, I know. That was a surprise for me when
yeah. Let's say 30 years.
30 years.
Yeah.
Okay.
Yeah.
I know it's a bit more than 30 years, but anyway.
Yeah.
Okay.
Between 30 and 40.
Looking back to your career, it's the one lesson you learned along the way.
Look, always, I guess, with experience comes a lot of learning lessons, and you've got to trust yourself, believe in yourself, and take kind of little risks here and there, not big risks because you don't want to look silly. So taking sort of little risks, as in just learning new things as well along the way, picking, you've always got to keep up to date. But it's just, like I said, trusting yourself and having that, growing your confidence in dealing with people and, advising, because that's basically what I do on a regular daily basis now with clients. So assisting our clients with, whatever issues they may have, or, things to help them with along their life journey.
We often hear about people talk about the tax planning. So what is tax planning?
Okay. Tax planning is thinking ahead.
All
so
right.
it's we know the past. You can't change the past. And that's what I kind of tell everybody. The past is history. So you sometimes you've created your history, but you can't change that. That's happened. So tax planning is, let's think ahead and see, okay, in regards to your particular business or your circumstances, how can we better help you in regards to your tax affairs, let's say, and obviously legally reducing your tax liabilities where possible, doing things properly. So it's more a sake of, let's do it properly rather than fix up problems at the end.
Which comes to the end of financial year. Generally, that's another thing is, why do you think people always think about the accountings when it comes to the tax return? instead of it's like a one long journey. Is they have to be your accountant needs to be with you all that year to save you money or a headache at the end of the year.
Well, you can't wait till typically if you come to me after financial year and then you say, oh, I want to save tax, it's too late. Do you have the receipts? You could have done something better during the last 12 months. Now, if you haven't done that, well, what can you do now? You can't go change what didn't happen, in other words. So doing it in advance is the best way to do it.
So what is the biggest mistakes the Aussie is making when it comes to tax?
Well, look, everyone's circumstances are different, I guess. So I wouldn't say that everybody needs tax planning because it's more, when I say tax planning, it's more focused along the businesses that we deal with. But it also, I also, handle a lot of, let's say, high income earners that, are property investors, let's say, and, strategies, before the end of June, if you want to save tax, which everybody knows, you put money in super, right? Because there's not much left that we have available in, that we can do in a sense to reduce your tax, let's say.
So that's one of the way to minimize your tax legally.
Yeah.
Right? And and there's other ways as well, right?
Well, yeah, look, it's structuring your business, in the ownership, how that's structured, because, there's different types of structures. You've got trust, companies, partnerships, which I wouldn't suggest anyway, but the main two structures would be companies and trusts these days. The government has recently made announcements in the budget which are not quite favourable to trusts moving forward. I mean, we have another 2-year window until 2028. So for the next 2 years, nothing's really changing. But now we've got to start thinking, okay, how do we move forward effectively from now on? So we have clients in these structures which may not be as effective as what they have been up until now. So we have to now think of firstly, it's not law yet. It hasn't yet been passed. So between now and then, what they've announced may change. So we kind of need to sit on our hands a little bit, and it's kind of in limbo, let's say. Yeah.
That is actually what you mentioned is really important. Indeed, it's like as you said, it's not a law yet. We have to talk about this because, like a lot of people are already in that panic mode. They think it's already changed. It's already a law. It's like the property market is going to crash. We're going to lose a lot of money. It's like, and we've seen that in the last couple of months as well. Like what they announced at first, and then what they're telling us right now is that pretty much every day is changing. They're softening it. It's changing some parts soften, but some parts actually, when it comes to greens, get involved. They talk about the SMSF.
Yeah, but
it's constantly changing. It's like there's no need to be panic, but at the same time, we need to start making a plans as well, right? Like it's good time to talk about. It's actually a good time to talk with our accountants.
I think so, because at the end of the day, if you're making a significant decision in your business or in your life financially, you should be talking to an accountant or financial advisor or someone that that can help you.
Yeah.
Right? Because these changes that have come about recently have been quite drastic, in the sense that everyone I speak to is not happy, right? So I haven't come across anybody that says they support these changes.
No.
So now I think the government has obviously intentionally done it to try and stop the property prices going up, like how they have been increasing quite rapidly over the last 10 years or so. So that this kind of has put quite a bit of a dent in it, and I guess it's served its purpose for that, but it's also killed the incentive for people, younger people, let's say. I mean, someone like myself, I've been in the industry doing this for 30 years. I don't have another 30 years left, right? So, but somebody younger, the way I see it, it's killed that kind of incentive as to, if you want to do something and look and be successful in life and business and things like that, well, there's not a lot of, there are not too many benefits or assistance from the government with that in the way they've structured these tax changes. Because no matter how much tax is, the question that I get a lot is, oh, really? I've got to pay that much tax? Not even if it's $1, right? People say, oh, that's a lot of tax. Now, from going from $1 to now $2, well, it's a jump. It's 100%
It is
increase.
unfortunately, so when they announce it, I'm not criticizing them, but just being honest, when they announce it, they this is for the younger generations, younger Australians. But I'm looking at the younger Australians, what happened to them in last year. First-time buyers, that 5% $1 million house, they basically end up with a $950,000 mortgage.
Correct.
And then, but that $1 million house, because of the 5% rule, it's become 1.1 million. They paid more than what it's actually worth.
That's right.
And now you're looking at those people, they have $1 million mortgage, but the house's worth is $950.
Yep.
All right.
And the government is invested in that too.
Yeah, exactly.
So they've contributed to their own downturn in that market.
We feel that as well. When we are looking at it, is when I'm talking with, especially with the young people, young generations, either business owners or they are just trying to get into the investment properties. Majority of them have that feeling right now. They lost their hope. They were like, we had a chance maybe building a business and then selling that. We can't do that. We had a chance doing in investments, and then before waiting for 65 to be retired, maybe we would have actually retire earlier and live our lives comfortably. We don't have that chance. They literally, as you said, for the people in our age, we already did something or we're doing it, right? And we don't have high hopes. But for them, they just beginning of their life, they just literally blocked every single options for them to be.
Well, yes, and the negative gearing change is obviously the big change. Well, one of the big changes. I mean, there's 3 big changes really. Yeah. Negative gearing has basically, if somebody has got a property portfolio of 3 or 4 properties, I can understand. Let's limit how much. At the end of the day, they're done okay. If the next one, you can't negative gear it. But somebody starting out, there should be some concession. Say, okay, it's your first one. Let's allow. That's how you get started in the market. You're young. You're working. You're paying taxes. You want to buy your own property. Well, allow that for the people that own 1 or 2 properties.
Yeah.
But not to do it for everybody is I think is unfair. So it's kind of, and that's where it's killed the incentive for and the hope, like you said, for the younger generation. I think they're the ones that are going to feel it more than anyone else.
When we talk about the property and investment side of it, it's what people should do before they purchasing a property. If they are buying for a long term, if they are looking for flipping, obviously different strategies, different things they got to do. But before they purchase the property, what they have to think about when it comes to tax.
Okay. Well, it's ownership. Who is going to own this property? So, because at the end of the day, when you buy a property, there's costs. Stamp duty.
Yep.
So depending on which state it's in, there's stamp duty. Each state has their own stamp duty laws. So, and then if you want it, so once you buy a property, you pay the stamp duty, and then when you sell, there's capital gains tax when you sell. So you got to think you have to be certain about what you want to do from the beginning, because it's going to cost you more if you don't do it right at the end. Because then to change it, well, it's going to be a lot of costs. Selling and rebuying is additional costs. So you don't want to be subject to that. So I think it's looking at the circumstance of with the client, and everyone's different because circumstances are always different. No one earns the same dollars as yourself, right? So you earn, what you earn is different to what someone else earns. what liabilities you may have, what, family, are you married, do you have children, all that. So you got to look at the circumstances of that person, and then from there work out what would work best for them. And it's not a one size fits all solution.
Yep.
You've got to look at each person's circumstances.
So they have to, we should say it's like before you do any kind of an investment, doesn't matter if it is a long-term, short-term, speak to your accountant. Like when it comes to the accountant, to be honest, like when it comes to the accountant, please, I'm pretty sure there was a lot of people watching us with they going that kiosk tax return. Yeah. Doing a tax return and then talking with an accountant, like having a proper accountant is different for me, at least.
Well,
right. It's the accountant is helping you with the a long life journey. Like I know you for 14 years now.
Yeah.
And in that 14 years, like ups and downs, generally downs.
There's some ups too.
But no, like let's just be ups and downs. Like having an accountant you can trust, and they actually looking for your benefit more than you do because of you don't know. All right. Yeah. If you don't know, you don't know, and then the accountant knows what they can actually benefit you, how they can save you your money and then how you can invest your money properly, how your structure needs to be properly.
Yeah.
So. Speaking with an accountant, like as you said, in every big decision, personally or business level, is the best thing you should do.
Well, I as an accountant, I would have to say yes, right? But not just as an accountant, as a let's say a normal person. That's what they should be doing anyway, because you're a builder, right? I've got no idea about building. My wife complains, you don't know how to change a washer. I tell her that's right. That's not me. I'll call a plumber, right?
Yeah.
But my experience in accounting is tax and business advice and creating wealth for people, for investors, etc. And along that comes a big journey of their life, is in from when they start working till when they D-Day, let's say, with estate planning. Because I was talking to a client this morning about his father's situation and about his assets and what's going to happen with tax. So it never ends, and you can't be expected to be an expert in everything, right? So look, I tell clients when I meet a new client, I say, look, I consider myself a financial GP, right? I'm not a doctor.
Yeah.
I don't prescribe medicines, but if you want to ask me a question, anything financial, I know a lot about pretty much everything. You can't say you're an expert in everything either. So where I'm not an expert in things, I will say we'll have to get a specialist to help us out with that, like a doctor does.
Yeah.
Right? So it's kind of similar, but on a financial, perspective, I guess. Yeah.
So, can you just I don't know if there is any, like I can see a few, but like what tax mistakes do property investors are doing?
I find generally people these days, because of everything, I guess I came from the school where there was paper, and today it's all digital, right? So it's paper and digital is two different worlds now. And keeping records is very important. And, if you don't have documents, you don't keep paper, when I say paperwork, it doesn't have to be paper, it can be digital today, but actually keeping things organized, right? It's being organized is the biggest issue, because I find the ones that are organized, our job is a dream, because they give us everything and it's there and we just do what we have to do, right? But the ones where you have to, it's like pulling teeth out of, trying to, can you give me this? Can you give me that? I need this, I need that. And then it takes months to get that information. Well, you're wasting your time, my time.
And it's costing them money.
And it's costing you money, right?
Yeah.
So I'm not in there, as an accountant, I don't want to be spending a lot of time on chasing people for documents or whatever it may be, information. So I'm trying to help them do it efficiently, right? But that's I guess the biggest issue we come across. It's the inefficiency that leads to, costs increasing,
Yep.
which hurts them.
Yep.
Right?
Is there any tax deductions because of you've been doing this for a long time? So the when it comes to property investors, they're missing it. Like there is some things in there, but they don't even know.
Yeah. Look, generally, most things are, the outgoings of the properties is people know all about that. In regards to tax deductions you mean property investors? Yep. It's basically like interest. The biggest deduction would be interest on a loan. So if you have a loan for the property, there'd be interest on it, right? And it's not getting that information is not difficult because we know what we need to ask for. So we say we need this, and etc. But then people have, I've seen it quite a lot where they have loans and that, the interest you pay on a loan, like I said, you buy $1 million property, 5% interest is 50 grand a year, right? So that's 50 grand is your biggest cost in a property. Your rates aren't that high. Your water rates are, less than all that. So, but when you have a loan and you mix that loan for private purposes, let's say you have redraw available on a loan and you're redrawing for other things, let's say, that changes the purpose of that loan. Now, some people don't understand that, and this might be a little bit technical, I guess, but some people don't understand that when you have a loan and you're redrawing for personal reasons, let's say you want to go on a holiday and you redraw 20 grand for a holiday, then your loan, let's say it was you owed 500,000 today and now it's 520 because you've taken an extra 20 grand out. That doesn't mean that the interest on that loan that you're paying from now on is fully tax deductible. Only part of it is up to the first 500, let's say.
Yep.
The other 20 is personal now. So you've mixed it up. So, a lot of the advice is you shouldn't be redrawing from your loan. You should have an offset account, and that's where you use your offset rather than your loan.
Yep.
And don't mix them two. Keep them separate. So it's more about advising clients as to how to do it and avoid these issues later on, because it does end up costing them money and they get less tax.
Yeah, it's again going back to the same thing. Is don't wait for the 30th of June,
and don't assume.
Yeah, and don't assume, and then like that's probably one of the biggest mistakes. I personally did that mistake before as well. For me, it's just tax return is just when I need an accountant, right? But it wasn't. I learned the hard way.
But I guess people think if you have a loan and it's the security of that loan is the property, well, it's always tax deductible. It's not. If you read, it's the redraw. Yeah, going back to that.
When it comes to business, so from your perspective, what do you think when someone should be consider moving from sole trader to company or trust?
If you're starting a business, most people would start off as a sole trader, right? Because of its less cost in setting up. Well, there are no costs in setting up. It's just really just applying for an ABN.
Yep.
And off you go. But I guess I always say to clients this, I say, look, are you doing this for a long term or is this just a quick, let's see how it goes thing, right? Because if it's a quick, see how it goes, sole trader, let's start off as a sole trader. But if you're thinking, I want to make something of this is going to be, this is going to be my business for life, let's say, and I'm going to make it happen, and you've got that mindset, start off as a company, right, from the beginning, because there's less issues later on. But I guess what I kind of say to people is test it with, start as a sole trader, and then if it's growing and you're turning over more money, and then we should change, move from sole trader to a company, because it's not just tax that I consider, it's asset protection, because as a sole trader, you are personally liable for whatever might happen in that business. So in the building game, there's no way you should be a sole trader from the beginning. So it really depends on the industry. If you're a piano teacher,
Yeah.
right, working as a contractor, right, well, fair enough. You don't need a company, right? There's no risk in that. Not much can go wrong, let's say. But maybe someone's hands might get stuck in the keys, but that's what it is, right? But that might sound like a silly example, but just to say, it's about asset protection and risk. And then if you start employing people, then it gets more involved because employing people there's risk involved as well. So you should obviously move to a proprietary limited company at some point in time and don't leave it too late.
So you start your business, you become a business, the company or trust setup. Like it's all about the setup. But how often they have to review their financial position, you reckon?
Look, I think at a minimum, it doesn't have to be, it depends on the client. Yeah. Some clients want, regular sort of kind of service. Mm-hmm. And then there's some that say, once a year. But once a year is fine. But like we said earlier, don't wait till after June. Do it in March, April, May.
Yeah.
Because we still have that 3-4 month window of opportunity to change something if something needs to be changed before end of financial year. So that's where, as a minimum, it should be, at least once a year, once or twice a year anyway.
So we've been talking about these changes. So we spoke with brokers.
Yeah.
But it's the first time we have an accountant here. Right. So a lot of people are talking. Yeah. And then everybody's talking. People have no idea. Everybody is on social media, TikTok.
Yeah.
So what happened? Like, what is the changes happening right now? And I shouldn't say what happened. What is happening? What they're proposing right now, and so how much they're going to affect us? Like everyday people. We're not talking about the people have like $1 multi-million in their portfolio in shares and the investment properties. Like for everyday Australians, how much is going to affect us? And then those changes.
Well, the three changes probably that are significant let's say tax-wise, is negative gearing. So from what they'd said from budget night, which was back in May, if you can still negative gear up to July 27, which is next 12 months. Mm-hmm. So this current financial year won't be affected. But if you purchased a property prior to budget night, then you're okay. You can still negative gear, right? If you purchase a property after budget night, you can no longer negative gear. But there's exemptions for like new builds. So if you buy a block of land and build a house, you can still negative gear even after budget night. So they basically left that in, I guess it's an incentive for new properties, but it will affect secondhand properties. So if anyone owns a older house, well, who's going to buy them?
Okay.
Yeah, the market's kind of dipped in that market because you can't negative gear it. So there's no tax incentive to get into that market. I guess the incentive now is you're getting a cheaper property, so you might buy it because it's cheaper. But do
you reckon is that going to stay that way? Like my perspective is they haven't fixed the actual problem, which is the supply.
No, correct, exactly.
Do you reckon market is going to adjust itself eventually?
Well, eventually it will, and I guess what has contributed to the property prices going up, from my understanding, is immigration. Influx of immigrants coming to the country, buying properties, and obviously we need supply because bring people in. Well, you need to keep having the supply to support that. I feel that the supply can be managed better by the government, but at the same time they seem to put a lot of restrictions on planning and going through councils and all that stuff because it just it becomes too hard.
Like from our perspective,
Yeah.
The building is not profitable like before.
Yeah.
When I met with people, they retired. They like back in our times, like we were building this many houses and we're making this much money.
Yeah.
Building is not profitable as before because of the it's not just only the how much it costs you and then the net profit in there. It's all about the trouble you got to go through. Like as you said, all that red tapes you have to pass.
Yeah.
And then along the way, the amount of money and time you have to spend to pass that process. And when you're looking at the end of your net profit, is not really worth to go through all that trouble and headache. That's the biggest problem.
I agree.
Yeah. So, but it's but at the same time, these harsh changes, is that going to fix that problem? I don't think so, because we still have like internally our population is increasing as well, not let alone the immigration, and nobody wants to build anymore. Other than those big builders, big companies, they building high rises and units.
Yeah.
And I don't know about like other than affordability, I don't know anyone wants to build a unit as well.
Well, I agree, because I mean the governments have they have to. When we talk about governments, talk about from federal, state to local. Each of those three have to work together.
Yeah.
Right. And come up with a solution on how better to get the supply out quicker, because I've spoken to builders like yourself and other clients as well that have the same issues. I've got let's say one client who's done very well from building and investing and developing over the years, but he started in the 70s, right? And that's the old guys you're talking about, the golden age. I said, every time I see him, I go, I wish I lived in your era. Like life was much simpler, because he would go to council with a simple plan. Can I build this? And
like, yep.
In half an hour was signed off, and off you go. You can start laying the slab, right? Today, it's like you've actually got to spend a lot of money on a report for whatever, and to get even before you get started. And it's just all that red tape. It's just, I feel it's just over the top, in the sense that yes, they have to protect certain things. I get that, right? But when it's clear as day that you have to protect it. But don't just protect it for the sake of protecting something that doesn't exist.
Unfortunately, you're dealing with that every day.
Yeah, and that's I think that's the problem governments have to overcome. Only probably a couple of months ago, I had a meeting. Our office is in Liverpool, and it was with a state member for planning, right? And he came to Liverpool, and we met with him, and he was all for changing the process of planning and all that. So he understood the issue, because the builders and the developers were telling him what the issues are. And his view was, yes, we have to change. But will it? I don't know.
No, how long it's going to take that?
Yeah.
Like I had a little conversation just yesterday. We were looking for a property to do internal renovation. It goes under the rule of alterations.
Yeah.
And I'm not going to say which council. They're estimating roughly around the 6 months to get an approval for that. We're not extending, like the property is not going to be extended, just on internal changes like wall changes and then kitchen locations changing, that kind of changes.
Yeah.
They're talking about 6 months for the approval. So like I'm thinking like, lucky I'm not trying to get a new build that's going to take a year to get an approval. Like,
no, that's right.
So for a builder, they need to buy that land, hold it for a year, and then after a year, it's just it doesn't make sense. So going back to this, the first question. So the CGT is one of them, right?
Yep.
Negative gearing is one of them. Second one is a CGT. So,
CGT,
which is, so what sort of changes happen with the CGT?
The current rules, we have what's called let's say, from 1999, they changed. It used to be indexed, and which meant that if you bought a property back before 99, you would get, indexed like CPI. Let's say if every year if it went up, you'll get CPI increase, and that would increase your cost when you sold it. That's how you. But then in 1999, they brought in what's called this 50% discount method, which basically means you buy a property for, I'll keep it simple, $500,000. It goes up to $1 million. Well, then you only pay tax on half of that. So you pay tax on 250 rather than the full 500. So what they're doing is they're getting rid of this 50% discount from July next year. So it's still applicable to people up to June next year. So if you already own a property and you hold it, if you sell it before June next year, well, you still get the 50% discount. If you sell it thereafter, well, then what happens? It's going to be very complicated, and us accountants, I guess, happy because we're going to have to, work it out and spend time, and it's very, it's not that straightforward. But I wouldn't say I'm happy about doing that. But that's how they've created. Yeah. That's the change they've made. So I think it'll keep it simple. It's basically you get a 50% discount up until 30 June next year, and then from that point on, it will be CPI. So there'll be two calculations in one. Okay. If that makes sense.
Right.
Okay. You bought a property for $500,000.
So is this, but if the property is purchased prior to budget announcements, those properties are grandfathered or no? Okay. So you have a property.
Yeah.
Doesn't matter if it is purchased before or after. Okay. And you're selling the property up until next year, July.
After July next year?
Yeah. After up until July. Let's just figure out that. Yeah. So you still have the 50% discount.
Correct.
After July.
Let's
say you're $500,000 a property.
Yeah.
And it's $1 million. You have a $500,000 profit.
Yeah.
Okay.
Yeah.
So how is going to affect you in both ways? You're going to be taxed with the first option. You're going to be taxed for $250,000
up to June. But let's say you keep it for another year after.
Yes.
Right? And then it goes up to 1.1.
Yeah.
Okay. And it's valued at $1 million in June next year.
Okay.
You have to get a valuation in June next year.
All right. So you're going to be, if you sell it afterwards, what's going to happen is you're going to be taxed for up until the June next year for 50%, and then 100.
100 will be different calculation.
Okay.
It won't be 50%.
Okay.
It'll be CPI.
All right. Okay.
Yeah. So that's the change.
So anyone who has an investment right now, they have to do the valuations, either selling or not. Can we say that?
Correct. Yeah. So
because if they sell it 4 years, 5 years time later, they still have to go through the same process. Like they need to know.
Yeah.
That's a really key information, and not many people talking about that.
Yeah. Well, hasn't been out there.
Yes.
Too much. But yeah, so June next year will be a great time for valuers.
Yes.
Because everyone will need a valuer to value their property. But you don't necessarily have to get a value next year. You can get the value in 5 years' time, but the value will have to go back and value it at 30 June 27.
Yeah.
So it would have to be a backdated valuation, if that makes sense.
Yeah, yeah. It's better to have it like an actual official valuation on that day when you're planning to sell.
I guess a valuer in 5 years' time has to do a bit more work and might be more expensive at that time. So if you can get a simple one now, then get it. And then in later, maybe you might decide to get another valuation if you didn't like the original valuation.
Yeah.
If the original valuation, didn't like, sorry.
That's a bit
if
knowledge.
They didn't agree with the original valuation.
Because the majority of the thing is we were talking about, it's like everybody, not we, but everybody was like, it's going to be grandfathered. But when it comes to this capital gain, all right, so that's a...
Yeah, it's not grandfathered. It'll be effective.
It's going to be split, basically, whatever the value is on up until that time. You're still going to get your 50%, but afterwards, you're just going to pay differently.
Yeah, it'll be two calculations.
Yeah, okay.
And one up to that date and a different calculation there.
So what is the next biggest change? Which is going to be? I'm not going to get into super fun.
Yeah.
That's pretty simple what they're trying to do. So you can't invest that money for the residentials.
Yeah.
I still don't understand why, but anyway, I'm not going to get into that. And then trust setups.
So let me go back to negative gearing for a sec.
Okay.
Negative gearing, only the possibility to negative gear it will only affect secondhand properties, used properties, residential, sorry. But you can still negative gear for commercial.
Yep.
So if you bought a factory or a shop or an office, you can negative gear regardless.
Yep.
So there's no change to negative gear in that regard. So I guess there are incentives in that space.
Mm-hmm.
You know, most people negative gear houses or, residential properties.
Mm-hmm.
But there is an opportunity if someone wants to get into the commercial world, they can negative gear.
It's you know what, they again I'm not criticizing anything, but this is what that's the reason we are here. It's this is how everyday people actually feeling and seeing the things. That's why we wanted to talk about it.
Yeah.
When you're looking at the changes, it's more, for me, it's more like they're pushing for the commercial big unit builds.
Mm.
Okay. Why? Because of what's going to happen now. Any investors out there, that's the only way they can do negative gearing. Right, so they're just going to be looking for the units, new build units, and then I personally think we're going to start seeing a lot of high rises happening.
Yeah.
But when it comes to the brand new houses, if they are hoping to get more supply because of these changes, it's going to be negatively geared. People are going to be looking at, instead of buying a second-hand house, let's say, they're going to be looking for the brand new builds.
Mm.
After this change, if they make the changes with those red tapes as well, okay, yes, we will see that.
Yeah,
I think we're going to see a lot of new builds happening because of the demand is already in there. Supply is going to be supported. Why? Because we're going to have higher demand for the brand new builds.
Yeah.
And the red tapes has been lifted or it's been adjusted.
Yeah.
And then we can see a lot of builders going to go back to the new build game again. Because of last couple of years, that happened a lot. A lot of builders I know, they've been doing completely different things.
Yeah.
They don't want to do new builds because of it's not profitable anymore.
Mm.
So we can see those people going back. Why? Because we have the high demand. We have the investors waiting for the new builds, and then they can basically start doing that. Either townhouses, single or the I don't know, it's a complexes or whatever they're going to do. But we can see that as long as they made that change to support these changes.
Well, they have to support the developers. There has to be an incentive. I mean, I guess as a developer, I think what has gone up a lot is land value went crazy, let's say, but then also after COVID, material costs are just there's a massive increase. So the costs of everything's gone up.
That's one thing is a lot of people don't understand as well, including myself. We've seen a lot of material prices increases, but reasonable reasons, understandable reasons, I should say. It's the shipping and this and that, so the supply issues, the pallet of timber, it's doubled up. Maybe it's actually more than a double.
Yeah,
but those prices hasn't been changed. We are still paying that double prices now. Everything went back to normal.
Yeah.
We don't have the container issues anymore. We don't have the shipping issues anymore. But the prices are up. And then hasn't been changed.
Unfortunately, that's a fact of life in a way. In the way businesses do things as well. Once people pay that amount, then they're used to paying that amount. They're not going to go backwards.
No. Once they taste that extra profit, those big companies, unfortunately. So looking ahead, it's too early to say it. As you said, it hasn't been they're not law yet. All right. No. But if they do, if they approve all these changes.
Look, they have already passed the negative gearing and capital gains changes. The other change in regards to family trust hasn't yet been passed. Now, that was a change where, they basically going after family trusts in a sense. But that hasn't been passed yet, and I guess that's one of the contentious issues that the reason it hasn't been passed is that because that there are a lot of people that have family trusts for different reasons. It's not just saving tax. Tax is it's not that. If I'm setting up a family trust, I'm not saying you're doing it just to save tax. You're doing it for other reasons. So it's, asset protection, estate planning, because the way trusts have worked for many years, and I've been doing this for a long time, is once you buy a property in a trust, it can stay in that trust for as long as you want it to, and it can pass down to your next generation. So and the people have basically created, let's say, well, I guess wealth, right? And and have contributed to tax. I've got a client, and I look at them as a very successful, what they've done and achieved. That the trust has basically helped their family live, create wealth, and not have to be supported by the government in welfare, right? Not one of them has asked for money from the government for whatever welfare, because they've looked after themselves, right? Now, if you're going to limit that opportunity to the future generations, isn't that going to affect the welfare at the end? I don't get it.
Oh, no, don't worry. Not many people. I don't think anyone.
Yeah. But anyway, regards to the trust, they're not law yet. The change to the trust is that they will, from 2028, they will tax trusts at 30%. And basically that's the main change, in that sense. Well, we'll have to just wait and see what happens in that regard.
The different question, I don't know, it's a lot of things happening, like let's just focus that was really depressing questions about the tax. I'm going to go back to that, but I have a few other things. Like we've been using a lot of different the accounting softwares, and then in the last couple of years we had a lot of AI get involved with that. Yeah. So how AI is actually working with the accounting right now? I'm not just only looking at the like a softwares we are using, but in your area, is it?
I think it's coming along very fast, and I've been using it as well. In not just accounting software. You've got the two, like the zeros, the MYBs, and whatever is out there, and so that they're bringing it on board in the sense of helping with AI assistance, let's call it. But in regards to advice, for many years, like I said, I've come from an era where you had to read a book and read it and understand things, right? In the last, let's say, 15 years, it's been Google, right? So Google was our AI.
Yeah.
But you would put a question, you would get some answer, and you would try and find something. Now AI is the next step in that level, where it actually generates a very good response in the sense to your question, as long as your question's asked correctly. But I've also so I've used it in that sense. So it's helping in that regard. It is a time saver in a sense, because obviously, writing a 5-page letter now takes 2 minutes, right? You still have to read it.
Yeah, of course.
And you still have to make sure it's correct, because I've found certain answers that have come back that were wrong. Yeah. So you can't just rely on it.
So software is actually using a lot right now. We would notice that as well, like MYOB Zero, they're using a lot, and it helps a lot as well. At the beginning it wasn't.
Yeah.
I gotta admit, it was painful, but that helped a lot. Okay, so what would be one advice to someone starting a business today?
Okay. Well, if you're starting a business, I think you have to be all in or not in at all.
Yeah.
If you've really got to be committed. You know, I see people come to me, you know, whether they're tradies or whatever kind of industry, and they've worked for somebody, you know, and they've said, I want to start my own business, I want to do my own thing. I said, fine. Do you realize what's involved? You know, you got to look them in the eye and say, mate, are you prepared to work 30 hours a day? I know there's only 24 hours in a day, but are you prepared to work 30? And they look at you, what do you mean? Well, you really need to bust it to make something of it. So you can make it, but you've got to dedicate your life to it. So, and that comes with pressure, right? You know, depending on what you do and who, you know, you have kids, you have family, you know, etc. So you got to be dedicated. So there are success stories, but the success stories are the ones that really commit and go hard at it and do it properly.
Like that's a really good point. People always, unfortunately, like I'm not saying it's a bad thing, but they're looking at their bosses, it's that much invoice, that much money they're making. But even if they're making that money, but I don't see so many people. They're so lucky with the first year they start making that money. They 100 hours a week.
Yeah.
Even up until last year, I'll say I have really beautiful people around me in the office right now. They're helping me a lot. But one day, one conversation was about my phone was constantly ringing. And I said, look, no, today it's quiet.
Yeah.
And then we count how many phone calls I did that day. It was like 300 something phone calls. And I'm working as well, physically working as well back then. And like that was my day. And making 200 to 300 phone calls a day, like receiving between 500 to 800 messages and notifications. It was so when you own a business, yes, you're right. Like you have to commit for 30 hours. Yeah.
Look, you have to stay committed and stay focused and, you know, stick to the plan. Let's say you got to have a plan to what you want to do and do it properly. There's no shortcuts. I don't care what anyone says. Just do it right. And I've, you know, the person that does it right consistently gets to the end better than the person that tries to jump who leaps. And that's how I think, you know. There are success stories where people jump leaps, but some of it's luck. 1%. Some of it's luck.
Yeah. What is the biggest tax myth in Australia?
Tax myth?
Yeah, myth. Yeah. You can't claim everything.
Yeah. Look, there's a lot of myths, I guess, you know. I mean, you hear it a lot, you know, that you can claim, so people come to me, I can claim my pet as a security, for example. Right? Can you? Yeah, you can. My mate told me at a barbecue. Oh, of course he did. Yeah. Like, so you can't believe everything you hear. Like you said, social media has become the new barbecue when you hang out with friends.
The social media is it. Social media is like we have GPs, social media, we have accountants, financial advisors. Everything is like
Yeah. So look, you can. Sometimes tax law can be very grey in the sense that it's how you understand the law, how you read it, and how you can't think of the word at the moment, but how you understand the law as to whether you can claim it or not. And I find some people say, "Oh, yeah, that says you can do that." I said, "But that's not how I read it." So how you read it and how I read it. Two different things sometimes, right? Not you, Eddie, but
no.
I'm talking about the Windren.
No, I did that. That's all right. I did that mistake as well. But like it's the experience is always. Yeah. At least I believe that way as well. Like it's experiences. It's always like the ones you don't forget. You never forget because you make a mistake, and you learn from that.
Look, I've made mistakes too. No one's perfect, and I thought that something was correct for a long time, and then someone said, "No, that's not right." Oh, really? And they were right. Right. So you just have to accept, because sometimes it's like you've been doing something for such a long time and you assume it's the right way. It's not always the right way.
I mean, as long as you have the right people around you, it's like, again, as you said, you don't have to be an expert on everything. All right.
Yeah.
But as long as you have the right people around you, they support you and you trust them, that's the most important thing.
Yeah.
I know I can genuinely say that as well. Like I said this to Frank many times. I don't see you as my accountant. Right. Yes, you're my accountant.
Yeah.
Like, I don't see you as an accountant. You're like a family. All right. So
Thank you.
it's because of, I know that no matter what, whatever I do is like, even if I try to do, I don't know, I'm not going to say the wrong things, but like, you always try to protect me. And I would say, like, if I'm doing something silly, risky, and then you're always in there to protect me. That's what people needs.
And not just with yourself, I guess all my clients, I'm there to avoid issues later on, at the end of the day, because I can see clearly in most cases where, what you're doing is you're going down the wrong path. So I'm trying to steer you in the right direction. That way you don't end up in the, what, because that's only going to cost you money, extra costs, etc. If the, taxes you've overclaimed or etc. or you didn't pay enough tax. Because the way the tax office is at the moment, unfortunately, there's no empathy. Let's put it that way. We can't, So it's more about protecting you, correct? So
Before I finish, could you please put one piece of advice or message for everyone's vision boards?
Whatever you do, if you're not sure of something, just ask the question, and just get the advice, because sometimes it's that 10-minute question or 5-minute question can avoid a lot of issues later on. So it's just getting the right advice at the beginning rather than when it's too late and then you end up, finding yourself in a lot of difficulty financially or whatever, legally, whatever it might be. So it's, that's it, because I always put myself in your shoes, the client's shoes. So I always do things as if I was you. So if I'm going to tell you something, as if I was doing it myself. No business is around for a long time if you don't look after your clients. That's it.
Absolutely. Thank you, Frank. Like, genuinely, thank you for today. It was like a lot of things in there I didn't know as well. I'm pretty sure there was a lot of people actually learned many things about the need changes and what's happening. For our listeners, if you guys enjoyed today's session, so if you can subscribe, and also if you share these videos with whom I actually think it can benefit, that would be awesome. And see you guys on the next one.